Here we go. Everybody, welcome to the Profit for Contractors podcast. I am with Bob Gauvreau of Gauvreau and Associates. He is a CFO, tax and law and accounting, all things the above. Bob, you can probably explain more on exactly what you do. I just know you as the CFO. So can you tell us a little bit more about your business and what you do?
Yeah, we are. And thank you, Austin. Always a pleasure to hang out with the PFC community. We are a professional services firm created as a CPA firm. We're a team of 180. We focus exclusively on working with entrepreneurs and even diving deeper, hundreds and hundreds of contractors specifically that we work with: accounting, tax, bookkeeping, CFO services, valuations, legal services. Whatever professional service you need, we do it. That's pretty much what we do over at Gauvreau.
Amen. Well, I want to get right into it because today is like a topic that hits really home for me. Going to be talking about something that most business owners never really want to admit publicly, but I've been through some serious cash flow issues, and I really feel like as a construction entrepreneur, most guys in the trades are going to probably hit some sort of cash bind at some point in their careers. And starting out, this happened for me, and even as I got bigger and scaled, it happened again. And sometimes we like to learn lessons multiple times, and more money, bigger problems. And I had to go through a series of laying off really good people. My payables had stretched, and this is something that you kind of were alongside me in that path and kind of helped me through. And I want to be able to talk about this now that it's in the past and feeling comfortable talking about it and admitting it. But really, wanted to start with the question that I think every owner really wants answered. And that's, how does this construction company, or how does a construction company that's growing and selling end up in a serious cash flow crisis? Because I didn't see it, came out of nowhere. But how does that happen in a business, Bob?
Yeah, well, let me set the context here, right? We as business owners exclusively, right? Like whether you're in a contractor space, whether you got a pool company, whether you're a professional services company, regardless, right? There's a lot of commonalities with businesses. Cash flow is one of them for sure. And I'm going to get specific on contractors, but I'm setting a generalization here because we all know as business owners the statistics of businesses that fail, right? And you know what? I would say the statistics would be significantly lower for people who are listening to this, seeking advice and guidance. But we know that 50% of businesses fail within a 5-year period, right? That just continues to happen. But this is the part, and this is why I bring it up. 82% of those businesses that fail because they run out of cash, not because they don't have the best product or the most incredible team or a great vision or an incredible culture. It's because they run out of cash. This is a problem that we can solve, right? Running out of cash is a problem that we can solve. And the more promptly we can identify that cash is going to be an issue, the better we can get out on the other end. And 82% of the businesses that fail can't solve that problem. But I would suggest that 99% of the businesses that get into cash flow situations can solve it if you understand what levers to pull. So you asked me, why do construction companies get into cash flow? Well, very first and foremost, if you are reinvesting and growing your business, cash flow is going to be just drying up quicker than you can imagine, right? You're growing your revenue. Regardless of what your payment process is, you've got more work in progress that's continuing to happen, more projects in progress, more materials that you're buying up front. Regardless of that, you've got more cash that's going out, right? There's more cash hopefully coming in, and the timing of that is important. But as we go from a smaller construction company that can maybe go out and buy the lumber for a project and then collect money next week from the client, well, now you've got more payroll, right? You're maybe off the tools. You're hiring more people. You've got more upfront payroll costs. You've now got 6 projects on the go that you're buying lumber for upfront, compounded by the number of people. You got vehicles going back and forth, which means you have insurance on all those vehicles. So very quickly, you can see the cash outflow as we continue to grow and scale becomes more challenging. And it's something that has to be actively managed. And as a growing and scaling business, you have to be proactive with it, because if we're reactive, that's when cash flow problems happen. So, in many cases, when we're looking at the contractor space, construction companies, we look at that payment cycle. When are you getting paid for your work? You've got times right now where, the global economic situation is not ideal. And people are tighter with their money. So all of a sudden people are paying their bills less. Austin, you talked about this yourself, right? That your accounts payable crept up. Well, this is all of our customers. Their accounts payable creep up. And guess what that is to us? It's our accounts receivable, right? So we're doing work, we're paying our employees, we're paying for materials, and we're not collecting the cash. That's creeping up because that's just what's happening in this sort of economic climate. So we have to look at our transaction process and proactively, when I talked about proactive cash flow, let's stop back end loading the cash transactions and let's front end load the cash transactions. Let's look at,
Hmm.
25, 50% deposit on acceptance, 25, 50% payment upon, initial on site of the project. And then whatever the remaining amount is, maybe it's 25, maybe it's 50% on the back end completion, the lesser the better. Let's make sure it gets completed before we leave the job site. I just had at one of my lake house properties had a dock put in, and the company that we're working with is incredible, right? Great trades company. They build the structures, they install them, they deliver them, top quality. Well, they just sent me an invoice after they left yesterday. And if they sent me the invoice before they said, "Hey Bob, we're coming tomorrow. We'd love to get this paid so we can get this finalized for you." I have way more incentive to go, I really want this project done, so I'm going to pay them. To now they're like, "Hey, the project's done. If you could just send us a check for this." I'm like, "Yep, I will. As soon as I have a minute." But, I have no reason to rush through this right now, and I will. But just think of the person on the other end who's maybe got their own cash flow challenges, and you're giving them the opportunity to not pay, and they'll take advantage of it. So,
Hmm.
so many things, Austin, that we can touch on, but hopefully that
Of
was a
course.
good um,
Yeah.
tip of the iceberg.
I would say from like the contractor's perspective on that, sometimes like that work comp audit hits and you owe more into insurance than what you had planned for. Or,
For
you
sure.
were profitable last year and now you owe on taxes and you need to take a little bit of a draw from the business to pay the tax bill or whatever. Like sometimes those things creep up too that you probably didn't plan for. But as you get into business and you start to be successful, you need to start now being, planning for. And like you mentioned too, you're always reinvesting, so a lot of times, even though that profit looks like it's there on the P&L, maybe you bought a new truck or you bought a building and now you have a debt service. That debt service isn't on the P&L. So even though it looks like you're profitable, oh, I made 20K this month, but I got 20K in debt service towards vehicles and, a warehouse that I just built or something like that, that money goes pretty quickly. And so those are
Totally. And
some of the things that can
transmission
be
on a
hidden.
truck,
Yeah.
a miscut piece of wood that was expensive,
Yep.
a tool that breaks down. It always seems like in those cash flow situations or those cash crunches that everything is happening at the same time, right? And,
Hmm.
then all of a sudden your customer doesn't pay you and it's, everything snowballs. And I typically refer to this as the wind out of the west, instead of the east sort of
Exactly what
situation.
happened to us. Yeah.
Yeah, 100%, right? And it happens to everybody. And, the first thing that I would say is good for everybody for checking in on this, right? Listening to this, how to proactively deal with this. The second part is it's okay. It happens to everybody. If
Hmm.
we've just had the world's first trillionaire take place. Have
Right.
you read of any Elon Musk books? For anyone listening, have you read these books? Like, he's been closer to being bankrupt
Yeah.
more times than
Yep.
probably anyone else in history, including probably recently, right? And
He
why?
bet the
Because
farm multiple
he's a
times.
trillionaire, but it's tied up in stock and assets, right? So if something
Mhm.
goes sideways on one of his projects, he's not completely liquid with cash. It's not like he's got all the cash in a bank account and could solve all the world's problems. He would have to sell, which would devalue and all kinds of different things. So like,
Mhm.
cash is one thing, net worth is another, profitability is
Yep.
another. Stack them all together and you got a powerhouse.
Yep. So let's say a contractor is listening to this right now and they're sitting and staring at a payroll on Friday that they don't have enough cash for. What should they do first, or what is that mindset going into something like that to generate that cash, extend payables? Like, what would you recommend to somebody that's looking at like that in that situation?
Well, for sure, there are two immediate things come to mind. One, stop writing checks out of your business immediately, right? Take a pause, take a minute. Doesn't mean that you can't do it tomorrow, but just stop. The second would be let's review everybody who owes us money and let's go knock it on their door. And that may be physically, that may be calling them, that may be emailing them, that may be whatever it takes. But the fastest way that we're going to get cash is collecting money from those that owe us. And those people owe us money. It's not like they owe us money 3 weeks from now. It's they owe us money that's already been owing to us. So like it's time to collect. And I think, if we look at the two components of cash flow, one is coming in and one is going out. If we can stop the money going out and we can accelerate the cash going in, that's how we can really start moving the needle. And payroll is not really an option, right? We can all agree upon that. We got to pay our employees, otherwise we don't have employees, and this is the problem. So that's still got to go out. We need to understand what that looks like. Is it 20,000? Is it 30,000? 100? We need to come up with that cash. The first thing, let's get it from those that owe us money. Second, if you have access to any sort of line of credit, and you know what, you may say, well, I don't have one right now and I don't really need one. Try and get it established before this happened. And, proactively, let's make sure if there's a home equity, let's get a home equity line of credit. Doesn't mean you have to use it, but it's available for you in emergency situations. Operating lines of credit from the bank or overdrafts, let's try and get them in place. Maybe we don't have to use it. Hopefully we never have to, but the cost of the $500 a year of a review fee or whatever they want to call that at the banks, let's have it in place. And it could just be what we need that day to make sure that payroll gets made. But if I'm having this emergency, it's Monday and I need to have cash by Friday, I'm going to collect money from those people that owe me. The second thing I could do is start collecting deposits on work or projects that you're getting started on. Accept all forms of payment. Start accepting Visa, American Express, checks, money transfers, whatever it is. Eliminate the roadblock and create ease in transferring money and getting it into your account. Those would be the two biggest ones that I would do immediately.
Yeah, I would say line of credit is definitely that thing that like you hope you never need it, but then the moment that you do need it, it's like, oh fuck. And then you get to that oh fuck moment and you haven't set that up, the bank's gonna drag their feet or they're gonna want to look into some things. And now you're not showing as strong as what you maybe would have 6 months ago. Like when things are looking strong, that's the time to go and get that line of credit or get that increase or whatever that may be.
Exactly.
So okay, cash is limited. How do I decide who gets paid first? Payroll, I got vendors, subs, taxes, debt, right? If cash is limited, okay, maybe I make that payroll by Friday. All right, now I've maybe created some room to breathe. Now what am I looking at?
Yeah. Well, let's just assume. Let me clarify something. Okay, I'm a professional tax expert. I'm a CPA. Um, my advice has
Facts.
to be somewhat following the rule book here.
Hmm.
I'm not going to say don't pay your taxes. I'm going to say you file your taxes accurately. Sometimes there's balances owing to the IRS, to the Canada Revenue Agency, to whoever, whatever the tax authority is that you have. It's okay. They charge you interest if you don't pay them. File on time, file accurately. We want to make sure we're paying the least amount possible. But if you don't pay them right away, they'll send you a letter or a phone call. Like there's time in that one to deal with that a different day. And having the government upset with you doesn't make your business less successful. It's going to be some phone calls and some harassment potentially, but like they're going to be okay.
Right.
Um, I would look at your vendors and I would say strategically, hey, here's the most important vendors. I'm going to call them all, right? I'm going to call them all and say, hey, listen, here's the circumstance that I'm having. I've got some people who owe me money. It's kind of cash strapping me. We've got a lot of projects in the go. Here's all of these. We're going to be using you guys as a supplier for all this. Can you give me a little bit more time to pay this bill? And you know what? 9 times out of 10, they're going to say yes, unless you've had bad relationships with them. But if you have had bad relations, maybe now's the time to get a new supplier, and then you hold off paying that guy for a little bit of time as well. But I would look at them next. I would also call the bank. And it's likely if you've got payroll on Friday and it's Monday, if you need the extra cash, the bank's likely not going to be the source of that within a 5-day period. But you can call them and say, hey, you know what? If I have a loan that's payable on Friday as well, can I get can we waive principal for this month? Just having some cash collection issues with some clients. It's going to be resolved by this day. If I get, some reprieve for the next 30 days, that would give me enough time to get back in shape. And, likely they're going to say, yeah, we can work with you on that. Again, and this is something, if you're asking this every month, they're going to at some point say no. But if this is the first time you've reached out, just be transparent. Say, hey, yeah, business is going great. We've got all these projects lined up, but with the way that everything is right now, people who owe me money are taking a little bit of time. Can you help me out? And I'll make sure that I continue to get those loan payments paid. And they will. They'll work with you.
Yeah, and I would say that's probably the biggest thing that I learned in my time with the cash crunch was like transparency with vendors, right? Just being upfront about what's happening in your business. You're continuing to throw them work. They are willing to help, right? We're all in this together, and a lot of them, when I called them, would actually share stories with me too about similar instances for them. So they were very understanding. And I think in this industry, everybody kind of gets that. You just don't want it to happen multiple times or to continue to happen, right? So reprieve once, twice, maybe, but like don't make it a habit and really try to find the root. And I think for me, when I think of the root of why it happened in my company, and I think this is just good for listeners, is like, we had overextended and overpromised on a lot of the things we're doing. We were growing so fast, so rapidly, and it kind of caught us and nipped us in the butt. And with that, we had poor customer experiences. So customers were clawing back at the end of projects. We were starting projects with subcontractors, kind of, almost like, oh shit, never called that guy, or oh shit, never got that number. Like, I need you to go ahead and get started, because we were juggling so many. And then subs are getting started without work orders, without approved estimates. And so you're kind of hiring them, time and material. And before you know it, what you had in the budget was 10. You maybe didn't communicate and say, hey, I need you to do this for 10. And they're invoicing you like 15 on the back end. And now all of a sudden it's like, you didn't just miss the budget, you lost. And you couple that with clawbacks from the owners, and you multiply that by 10 jobs at a time, like, it eats pretty quick. And
For sure.
it came to the point for us to have to like cut staff, cut overhead at that point. And I don't know if that's something that you'd give opinion on as far as a strategy to reduce overhead and reduce staff, but like, obviously the fastest way to cut expenses is to cut out the capital expenditures, right? So
Yeah,
the
like
OpEx, right? Like, what
I
do
think we
you
have to
stand on?
understand the profitability of the business and what's sort of lying ahead as well before we start cutting expenses. Like, cutting expenses will eliminate future cash outflow, but it doesn't solve our current cash flow problem. And sometimes cutting resources just means that we aren't going to be able to generate as much cash inflow in the future as well. So, like, it's definitely a solution. We've all heard the stories of the change management CEOs that get hired. They come in and they look at an operations and they start cutting things and they make it a little bit more
Mhm.
lean and mean. And you know what? We all need to review that from time to time as well, and make sure that we're not overspending on certain areas, whether it's redundancy in team members, whether it's, dues and subscriptions from Apple that we consistently
Mhm.
get the monthly charge on that we just keep paying and, forget about it. There's an element of that proactively, again, we need to be reviewing these things, but I wouldn't say from a cash flow solution standpoint, cutting staff is like a number one priority. If we see that our revenue and our projects in the future are going down, then we do need to look at our staffing and say, does it make sense for us to have these many people around? But if our future is busy, staffing is going to be needed in order for us to deliver and for us to generate the future cash flow. Again, the first thing I would do is go to everybody who owes us money and start collecting. And that'll
Hmm.
buy you the time, and stop paying the bills going out. Stop going out, accelerate coming in. That's the name of the cash flow game.
Yep. Yeah, for us, it was heading into a winter time period, and it wasn't necessarily like a
Yeah,
big, like you're cut forever, but it was definitely like a layoff. And we would typically go into layoff on certain, labor force of the business anyway. So it wasn't necessarily anything out of the normal. Um, However, there was a couple office staff too. We were just a little fat on overhead that we just like, it's like, our revenue was going down for that time period. So it just made sense.
for
Um,
sure. And that's part of reviewing the overhead
yeah,
consistently and saying, do we have redundancy? Like the reality is that we all start to get a little chubby after the holidays, we want to
right.
eliminate some of that winter weight. Well, we've got to take some action to eliminate that. And that, operationally is sometimes it's surplus staffing. Sometimes it's, other, do you need that second rental space storage unit still for some
Right.
of the products? Like you continue to pay $200 a month for that storage
Yeah.
unit, but you could really just pull it into your shop. Like, are there certain
Yeah.
things that we can just cut that aren't needed anymore?
Yeah. It's really looking at every line item on the overhead and being like, does that help us be more efficient or make us more money? Or does it, like, is it really necessary? And I think kind of a keep combine kill exercise with that, right?
For sure.
Um, And one of the things that I think is important to note too is just really the mental side, right, of business owners that are going through this because I think oftentimes, I don't know, I guess for me and in my instance, like the business can look so good on the outside and business, like everybody that sees a business owner, automatically thinks that they're, of some sort of stature. And, when you get into a situation like this, it can bring on shame and isolation and just fear, right? And you get into like this decision fatigue or decision paralysis where it's like, I don't know what to do. And it's like, sometimes it's just like, you just got to start making decisions, right? You're in the situation. There's nothing that can change that. And for me, it was just like, I just needed to start making decisions, whether they were right, wrong, or indifferent at the time. Like just making a choice, I think was healthy for me. It felt like I was making strides or getting momentum in the right direction. And I'm not sure I would do anything differently. I haven't really gone back and reflected a ton on that, but like, I definitely remember feeling a little bit of like a sham or like imposter syndrome. And but I also just remember too, like even earlier on when I was in business, I remember being into, a small amount of debt, like 25K. And I remember how heavy that felt early on when I was just like, a $500,000 contractor a year. And, now that we're doing, 10x that, 20x that, and, it's almost like 250,000 is almost like that equivalent where that feels, just as heavy as what that 25 did. And, and yeah, but I think like when you're in that mode and you can just start to make decisions and chip away, right? You can start to feel that light at the end of the tunnel. And I guess that's my next question, Bob, is like when do you actually start to see signs of that company, like from like a financial perspective, whether it's on the P&L or the balance sheet, like where do you start to see that turning of the corner and that light at the end of the tunnel for some of these guys? Like what is it on the balance sheet or what is it on the P&L that would actually like give you an inkling that things are turning to the right direction?
So I'm going to answer that, but I want to circle back to something that you just said, Austin, because I think it's really important. The idea of it being a lonely road out there for business owners and contractors
Hmm.
specifically, right? And I think this is why it's so powerful to have a community. And, you and the community at PFC is a very powerful space for someone who feels very alone in these decisions and like what tool, what tactic, what should I do? What have other people done? This is why the communities are so important you don't have to do this alone. And PFC is a
Mhm.
very powerful community with some really killer contractors, but everyone's trying to figure out the same thing. Whether it's cash flow or it's pricing or it's hiring or it's marketing, whatever it is, there's solutions in these communities that are incredible. So please, for anyone listening, take advantage of the fact that these communities exist and jump in and be part of it. Grow together. Um, Hopefully that's
Amen.
okay, Austin. Know that I plugged what we got
Amen.
going on because man, oh man, it's powerful. And I attribute we're now a $25 million company, 180 people. I attribute a lot of my success for the people and the communities that I've been part of. And
Mhm.
PFC is one of those. And it's, once again, super powerful. Take advantage of the fact that this community exists, get in there, support each other, but also get the support that you need along the way. Um, so to answer your question back about the finances, so how do we start seeing, that things are starting to get a little bit of reprieve when you're starting to make some of these action plans and I think there's two very distinct parts and one is profitability, the other is cash flow. And one of the things that we need to know is that cash flow does not equal profitability. Profitability does not equal cash flow. You need both, right? One, if your profit margins are brutal, if your net income is non-existent in your business, you will have cash flow issues, right? So it is the number one driver of long-term sustainable cash flow. Super important. And I think what you'll see as you start to come through this, you'll start to see and feel maybe some of the pressure come off related to vendors. You'll start to see some reduction in some of the liabilities. You've got more cash coming in, so you're paying down your vendors, you're paying down maybe some of your loans, maybe your overdraft, your line of credit, your government tax obligations. We start to see some of those come down. That's our cash is paying that down. You start to feel less pressure from your vendors, feel less pressure from those that you owe money to. You'll start to see that happen. You'll start to see your cash accumulating a little bit and maybe not too much because it's coming in and it's going out to get rid of some of these liabilities. But the other thing you'll see is the people who owe you money, that amount is going to start to dwindle. So these will be some highlights. If you're looking at like a financial scoreboard to say, how are we going to know if our cash flow position is going to be getting better? Well, you're going to see the amount of money that people owe you drop. You're going to see your profitability continue to go up. That's a requirement, regardless. You're going to see your payables, your vendor obligations are going down. Those three things together, again, assuming profitability is maintained going forward, you will see your cash resources increase and you will start to get the relief. And as soon as you start making some of these payments, you'll start to feel the pressure come off from some of these vendors as well, big time.
Mhm.
And emotionally, when you're in a cash flow crunch, the phone calls are really the worst part, to be honest. It's like, hey,
Mhm.
where's the money? It's Friday.
Yeah.
You promised me by Friday. And you're like, can I have until Monday? And
Yeah.
it's the
Dealt with
time and
those
the energy.
frequently.
And, yeah,
Yeah.
you're
It's a
drained. So
punch in
you'll
the
feel
nuts.
like you'll feel like that's coming back. And,
Mhm.
but it's a, cash flow isn't just one thing, right? It's a bunch of different things working together. And if we can say proactively, you want to avoid cash flow problems, look at that transaction cycle, get paid earlier, make sure you have a good collections policy, right? A lot of businesses, mine included, okay, not guilty as charged, is we will invoice people and we will just be like, they're good people, they're going to pay the bill. And we just let it sit.
Mhm.
And then 30 days comes up and we're like, oh, they didn't pay it. They'll pay it next month, or this month coming up. And,
Mhm.
we let that continue to happen. You need a good policy and a follow up procedure to make sure that that gets done. There's apps that we can get, that plug into our QuickBooks Online that automatically start trying to collect money for you, which is really great. Having somebody who's following up, making the phone calls, telling people that they have balances outstanding, it's important because many times the people who owe you money, they go, "Oh, we didn't know." Whether they're being honest or
Mhm.
not doesn't
Never saw
matter.
the
You've
invoice. Did you send
yeah,
it?
I never. Oh, geez, can you resend it? Yep, no
Hmm.
problem. Actually, I'll resend it right now while we're on the phone. And we accept credit cards, so I'm happy to get this cleared up for you right now.
Yeah.
Having a follow-up process and not letting everybody off the hook,
Yep.
that will drastically improve your cash situation. And if you guys, right, if you're feeling the cash crunch right now and this is resonating at all, if you can focus on that for a minute, accelerate your cash in, start getting deposits on jobs you weren't getting, collect the money that you have that's owing to you, stop paying your vendors, have those conversations, get maybe extended terms on that. You will have a full, let's say you can do this for 30 days. You'll have an extra month's worth of money coming in and no money going out. And you'll have increased your stockpile of cash. So now you've got options and you can make decisions, right?
Hmm.
And sometimes that's, putting out the fire that's the closest to home first. And then you work down the way and everyone's primary fire might be a little bit different.
Most times take care of the squeaky wheel that's been calling you and, on
For
your
sure,
heels. Because they
for
probably,
sure.
sometimes they're having a cash flow issue too, and they're trying to get the payment from you, you know?
But this is exactly what we're talking about in having a
Yeah.
good follow-up policy. Be the squeaky wheel,
Yep.
right?
Yep. Exactly.
Especially if, and these are the contractors that are listening today, right? The contractors who do quality work, they show up on time, they deliver as expected, and the people haven't paid their bill, right? You've done everything that was required on your end to make the customer happy, and they haven't paid the bill. Like, be the squeaky wheel. They are guilty. They feel guilty,
Yeah.
just like you do when you don't pay a bill at a
Hmm.
certain time. Like, oh shit, I really wish I could pay that bill today.
Right.
I really want, like, it's weighing on you when it happens. It's weighing on them too. So be the squeaky wheel. Make sure that you're paid as a priority because you don't want everyone else paid first.
Right. Well, last question, Bob. So obviously, PFC is all about like operating systems, right? We have sales and marketing operating systems. We have money operating system, production operating system, leadership, and freedom, right? So those are our six operating pillars. All right. So specifically today, talking about money operating systems, cash flow specifically, right? If you had a contractor who's in this situation, all right, they're 90 days behind bills, they're worried about payroll and exhausted, all right, from answering all these questions. What kind of systems would you recommend that they have, like, so that this doesn't happen ever again? What advice would you give them about an operating system that they could implement so that this doesn't happen again? Is it, a 13-week cash flow outlook or a cash flow forecasting spreadsheet or job costing, like all these things that they could do? Like, what is the one, two things that you would recommend to them for a system to implement?
Yep. And not to be repetitive, but I think sometimes repetition is powerful. I would have a really good collection policy and a process for follow up. That would be a big one. I would be looking at my transaction process and seeing how we can move cash coming in sooner or more of it to the front end of the line. I'd be looking at both those policies. Those are going to be big policies for you, right? I'd be looking at our credit policies and our credit systems and saying, how do we get a line of credit? How do we get an operating overdraft in place? How do we get some credit cards in place so that we have an extra 30 days to pay our bills so that we're not incurring any interest? We sure don't want to pay credit card interest. But how do we utilize some of these systems, get some points, pay our bills on time when it comes due? But how do we introduce that? How do we accelerate cash coming in, decelerate cash going out? But for sure, budgeting is going to be super important, right? And I know I said that profit does not equal cash flow. It does not, but it is the number one indicator for long term cash flow success. Having a budget in place, knowing your revenue targets, making sure that you're staying on track from your costing, whether it's your direct job costs, your wage costs, your labor burn, all of that, so that your profit margins are high. Making sure that your overhead is below budget, right? Or on budget, so that you're not spending more money. Driving profitability, huge. And then lastly, looking at this, you're attaching a budget to a forecasted, projected income statement, attach in the cash flow impacts of this, right? If we're doing a really good job with our cash flow management system, we shouldn't have a lot of cash fluctuations. If we're generating profit, we should be collecting that cash in the period that that profit is taking place. we should be having that coming in. If we're not, then we've got, cash collection administration policy issues that we need to deal with. But drive that profitability. But then like let's throw in a cash flow forecast. What are the other areas that are impacting cash flow? Well, we maybe have loan payments. We maybe have owner draws that come in. What are those other outflows? Because we may have a break-even profit of 10,000 that we need to make every single month just to get cash flow even, right? What is that break-even number? We need to understand that. And yeah, cash flow forecast is going to be super valuable to implement in your
Mhm.
business.
Yeah, I would say that was probably the number one like system that helped me get out of the situation. But like to make it not happen again, I think it's just keeping my eye on something like that, keeping my eye on the numbers. Because one thing that I learned through that season of the cash flow problems is that it didn't necessarily mean that I was like a bad business owner, right? It was just sometimes, you grow too fast, you make some mistakes. And for me, I definitely took my eye off the numbers and wasn't as involved in that money operating system for my business. And it hit me like a ton of bricks. I didn't see it coming. And that was because I took my eye off the prize. Um, but, whatever you got, there's a path forward, right? And if you're in the middle of this right now, don't isolate yourself. Definitely talk to an advisor like Bob. You can reach out to PFC. We can help get you a plan to take care of this, put an action plan in place, get you in touch with Bob if you need to, because we've lived through it, right? And I'm still standing, and so can you. And yeah, that's really it, Bob. Any closing statements from you? If not, we'll say goodbye to the audience and kiss this one goodbye.
Yeah, no, lastly, just to reiterate the PFC value that's here, right? So one, having the community not going through this by yourself, I think is super powerful. Two, having a community that has answers, right? The coaches inside PFC, including financial coaches. You've got Anna who's in there, does a great job analyzing financials, but as a seasoned veteran in, hey, here's three things you can do to improve your cash flow right now. You don't have to go far to find answers in such a valuable community. So make sure you reach out, make sure you connect. And if you need to connect with an external resource, CFO, we're always here to help as well at Gauvreau CPA.
Amen. I appreciate it, brother. Thanks for joining. Always look forward to times with you and getting to chat money and finance and how those things relate to running a contracting business successfully. So thank you so much for your time. God bless, and we'll see you soon.
Take care.